Hi everyone, for those of you who are here with us, right? So I'll just wait for about 1 to 2 more minutes for more people to stream in. So for today, we will be covering the FX market outlook, a summary of what has taken place for this year, and also what we can look out for in 2023. Right, so if you guys have any questions regarding the setups, if there are any charts that you want to take a look at, please do put them under the questions chat. So I have both the Q&A chat as well as the uh, chat box open, right? So if you guys have any questions, do put them there. So we'll just wait for about 1 minute for more people to join us before we get the session started. Okay, so let's kickstart today's session. So for today, we will be covering on the FX market outlook and also getting ourselves ready for the year ahead. So just a quick introduction of myself. I'm Lee Sing. I provide FX advisory to institutional clients. I'm also part of the team that's recognized by the Technical Analyst Awards as finalists for the Best FX Research. So if you guys are watching a recording of it, feel free to reach out to me on LinkedIn. If not, if you're with us live right now, if you have any questions, feel free to put them under the questions chat. So just a quick disclaimer before we get the session started. The information presented here is not to be treated as investment advice. It's for educational purposes only. Okay, so this is the agenda that we will be covering for today. We will first cover the summary of the global market outlook in 2022 and also what are the key themes as well as impact on the FX markets. We will move on to take a look at the dollar, right? So how the dollar has performed as compared to its G7 peers. And then finally, the trade opportunities in the FX market that we can look out for going into 2023. We will also be hopping on to the charts to take a look at the technicals of it. So if you guys have any requests for any charts that you want us to take a look at from a longer time frame, right? So for this, we will analyze it starting from, I believe, the weekly or daily time frame. So this would be from a higher time frames perspective down. So if you guys have any questions regarding that, do put them under the tab as well. Okay, so let's kickstart this session, right? So I will have the chat box and Q&A box open. So for those of you guys who have any questions, do put them under the chat. So let's first start with a summary of the global outlook for this year, right? So what were the key events that took place as well as the impact on FX markets? So for one, right, we have the Russian-Ukraine war. So Russian-Ukraine conflict in general, it drove energy prices much higher, right? And this is partly attributed to supply constraints. So when the Europe especially, right? So Europe and UK, they are huge importers of energy. So in this case, they have slowly weaned themselves off Russian supplies, right? But in the process of this, we can see that both economies suffered from supply-driven inflation, and this inflation, it's also forcing or putting central banks in a difficult position, right? So essentially, they would have to raise interest rates higher to fight inflation, but demand is not keeping up with it as well. So then this caused them to have a recession risk. So that's one, right? And also we can see that in general, when inflation is in the spotlight, central banks are aggressively tightening their monetary policy in order to stem and entrench inflation. So this is another theme that we have seen so far. And along with that, especially for the Fed, right? Fed's hawkish stance has pushed the dollar higher for this year, right? So dollar has been outperforming as compared to its G7 peers. So we'll take a look at the chart later. Right, and we also have stagflation and recession risk for global markets in general. So depending on the region itself, right, tighter financial conditions can also translate to economic contraction as well as a weak labor market. So apart from just that, right, when dollars strengthen for emerging markets, right? So essentially, if they have or if they are holding dollar-denominated debt, higher interest rates and the dollar would also contribute to a tougher financial condition for these emerging markets. So this will also put them at a risk of recession. So we have consumer spending as well, right? So consumer spending it's also at a risk with higher energy prices, and this is driven by the supply constraint as well as conflict within Russia and Ukraine. So in this case, we can see that higher energy prices would then reduce the purchasing power for consumers. At the same time, right, rising interest rates would also increase the debt servicing costs. And other themes would be easing of COVID lockdown restrictions in China, especially in December. They're also easing traveling requirements as well, right? So this would be another theme, and we could see China pick up and for next year, right? So then this would be an optimistic outlook for, especially for its trading partners, right? So New Zealand, Australia, and also China. It's the world's largest importer of oil. So when there is an improvement in China's state of economy, then we can see a pickup in the demand for oil. And the next one that we have would be on dollar strength, right? So dollar has been strengthening throughout this year, but at the same time with dollar strength, it also challenges emerging markets, especially those who are holding dollar-denominated debt. So higher interest rates prospects would then accelerate recession elsewhere. So when they are holding on to this dollar-denominated debt, when interest rate rise, right, they would have to pay more in their in foreign currencies. And all the more so when dollar strengthen as well. Okay, so let's take a look at dollar's performance as compared to its G7 peers. So this is the year-to-date relative performance, right? This is taken from Finviz. So in general, we can see that as compared to its G7 peers, right, dollar outperformed. And the next best performing currency, it's franc, right? So franc depreciated 1.323% against the dollar. And the worst performing currency, it's yen. So if you take a look at dollar yen's chart, you can see that dollar yen has been on a strong uptrend this year, partly driven by the interest rates differentials as well, right? Where the Japanese Bank of Japan is keeping a loose monetary policy, whereas for the Fed, they're aggressively hiking rates just to rein in inflation, right? So for euro itself, on the on central banks front, right, ECB is seen to be more hawkish because inflation has yet to slow down. So that's on for ECB front, right? In general, CAD, Aussie as well as Kiwi, right? So they are experiencing lesser inflation as compared to its peers, right? And also CAD, it's also supported by oil prices. So when Canada is a exporter of oil, so when oil prices are rise, right, it helps to boost the Canadian dollar as well. So that's on CAD, right? And Aussie and Kiwi, other factors that impact their movement would be China, right? So they do have China as one of their largest trading partners. So when there is a negative outlook on China, right, especially in terms of it tightening its restrictions, then this will impact the market risk sentiment, which will also impact the Aussie and Kiwi. So in general, we can see that for this year, right, dollar has been on a strong uptrend, and it's doing relatively well when compared to the rest of its peers. Okay, so now that we have covered roughly what's going on in 2023, right, the main themes, what can we expect going into, now that we have covered what took place this year, right, what can we expect going into the next year? So for one, right, inflation is expected to slow down, right, especially when the economy slows down. And this will also see a weaker labor market, right? So labor market would be much weaker, and we also have supply chain issues becoming less of a concern. Supply chain issues were triggered mainly by disruptions, right? Especially with the pandemic. So with the pandemic, you can see that there were a lot of restrictions in labor movements, as well as longer time taken to transport goods, right? So in this case, when there is easing of this restriction, supply chain bottleneck should ease. And also when China opens up, right? So we should see these issues being resolved. And then the next one, it's on Europe, right? So Europe diversify its energy sources. So Europe has been heavily reliant on Russia for energy, right? I think it imports about 40% of its oil. So this is a key risk for Europe, especially when the conflict happens, right? And also at the same time, they are also imposing the Russian oil ban. So the disruption in energy supply drove prices much higher, and it also caused the region to suffer supply-driven inflation. So it's a contributing factor to the inflation rate that's in Europe. So this is particularly due to natural gas. So when there's a reduce of exports from Russia, right, they are currently diversifying the sources. So other sources would be taking liquefied natural gas from US, right? So one other thing about this is that Europe has been storing energy, right, filling its gas storage tank for the winter. So it's likely that they are able to have a capacity enough to avoid energy rationing during this winter. So this is good news, right? And the other one would be basically the Euro region as well as UK experiencing mild recession. This is partly due to higher energy costs, right, and its impact on real income. So in the Euro region itself, policymakers have agreed to imposing a maximum amount, right, for energy costs. It stands at around 180 euro per megawatt hour, right? So this will help consumers to cope with the rising energy costs. So that's been imposed, right? So hopefully we're able to see lower energy costs in the coming year. There's also expectation of a mild downturn, right? So apart from just the Europe and UK region, we are also expecting a mild downturn in the US economy as well. So in US, they are less reliant on energy imports, right? So they do have their own they do export oil as well. So the reliance, rather the reduced reliance on this energy imports should have a lower impact, right, on the US economy as compared to the Euro as well as UK. There's also post-pandemic improvements, right? So when when there is an exit from the pandemic, we should be seeing activities pick up. But of course, we'll have to weigh this between the higher rates as well as high cost of living. So this would weigh on consumers' disposable income. And the next one would be a reduced risk of deep recession as well as persistent inflation. So in the Eurozone itself, right, when they have weaned their dependence from Russia's supplies, this should help to avoid deeper recession, right? Especially when energy prices are coming down. And at the same time, right, this persistent inflation would force the ECB to raise rates higher, right? And essentially to curb inflation. So we're expecting higher rates through the next year, right? Through May with a 3% peak for ECB. So other themes would be the opening up of the Chinese economy, right? So this could alleviate supply chain disruptions and also contribute to lower goods of inflation in 2023, especially now that China's economy is opening up and we're seeing much softer restrictions. There's also the low vaccination rates, right? So a big part of the reason why the government has been uptight about restrictions and just handling the pandemic in general in the Chinese economy as compared to other countries, it's that there's an aging population with low vaccination rates. And on top of this, the hospital capacity is also limited, right? So all of these factors have led to a very cautious approach, right, when dealing with COVID. Prolonged lockdowns, however, are unsustainable, right? So we can see that when there are prolonged lockdowns, right, it's taking a hit on economic activities. So when there is this release, right, when restrictions are eased, we should be seeing pent-up demand coming up as well, right? So this should provide a boost to the economy as well as the market risk sentiment. We also took a look at a rebound growth in China, right? So a rebound growth in China should increase demand for global commodities. But at the same time, right, we should be seeing a net effect of lowering inflation in 2023. The other theme here, which would be more detrimental to the market risk sentiment, right, is increase in tensions between US and China, right? So the US is trying to restrict China's access to high-end technology, whereas for China, right, they are emphasizing more on self-sufficiency in energy, food, and technology, right, especially with this geopolitical tensions that we're seeing, right? So this could result in slower growth as they focus on moving inwards. Okay, so before we hop on to do a summary of it, right, let's hop onto the chart to see what are the setups that we can take a look at, right, going into the new year. So we'll first analyze dollar index, and then we'll take a look at euro dollar as well. So if you guys have any other setups or any other requests, right, do put them under the chat. So let me just bring up this chart. Okay, so this is a chart on TradingView. So let's first take a look at dollar index. So you can see that dollar index is currently sitting on an interesting level. If you're on the higher time frame, right? So on dollar index first, we want to identify key levels or key zones. You can see this region that dollar index came into. It was the previous resistance area, turn support. So we see sharp reversals here. And then again over here, and the break and retest of it as a support level. So currently prices are testing in this region again. This is at around 103. So this level, right? So if to take a look at this region, right, price is currently sitting on this level. If you're going down to the smaller time frame, so the idea behind this is that coming into this region, we should still be seeing bearish order flow in terms of lower lows and lower highs being formed. So the first change in market structure would be a sign that this demand region is holding. So in this case, you can see that at least on the daily time frame, we're still seeing successive lower highs and lower lows being formed. If to go to the 4 hours time frame, you can see that right now we're seeing this consolidation period where markets are moving sideways. But if you take a look at the structure, right, so this is the high, this is the lower high, and we have a lower low being formed, right? So right now in terms of market structure over here, you can see that this is the last high that was being formed. Market failed to put in a new low. And if you're on the 4 hours time frame, so recall that when we take a look at demand regions, right, the extreme of this moves. So essentially when price saw a push up to this area, you can see that this area itself then serves as a demand zone. So if I were to highlight this zone, you can see this area. Let me just put this in a different color. So the idea is that when price comes into this region, you can see that this push up drove prices into a supply area over here, right? It encountered a supply region or a resistance zone. Price pushed lower, right? We saw the first test of the demand area in this region, and then again over here as well. So when price comes into this region, right, when price taps into this area here, so what we can do is again, go down to the smaller time frame, let's say the 1 hour, and wait for a change in structure to signal more upside. So these are the two zones that I'm currently watching, right? So we'll probably get more clarity coming into the new year. So right now it's holiday seasons as well, so we'll be seeing much lower volatility in the market, right? So you're seeing that prices are moving sideways, right? So this is on dollar index. You can see that's coming into a demand area. So if we are expecting more upside on dollar index in the new year, right? Something else we do have to note is that you can see this area here. So if you want to wait for a confirmation for more upside, ideally we want to wait for a break of the last high. So you can see that this is the last high. How do we determine that? You can see that this is the move here, right? And price pushed higher. So currently within this region, it's just moving sideways. So ideally, we want to wait for a clear break and close above the high, right? Above this high here, before we can have confirmation from our upside. So this is on dollar index, right? Let's next take a look at euro dollar. So if you're on euro dollar, right, you can see here on euro dollar, prices are sitting on a key level. So on the monthly time frame on euro dollar, you can see this region, right? This area itself. You can see how this area was tested as a resistance here. Price came in, tested as a support. We saw this region here. And then again over here, right, before there is a strong break and close below this area. So for me, this would be the resistance area, or this would be the supply region, right? So if you want to map it based on specific candles, you can take a look at this movement over here. So essentially this candle held within that wick of its previous candle. And if you go to the smaller time frame, right? So if I were to go to the 8 hours, for example, and just move out of this, you can see that this is actually a consolidation. So this area that we've highlighted. This is slightly laggy, right? So this area here, you can see how there's a consolidation over here. This zone, right? So price moved slightly higher before we saw the strong bearish break. So this itself would serve as a supply zone on the daily picture. on the 8-hour picture, right? So if I were to go back to the weekly time frame, you can see this area here, right? So essentially we see this reaction. The price had tested this region as a resistance, right? So let me just remove this. You can see how price tested this region as a resistance before it pulled back. So price tested as a resistance before we saw the strong push down, and currently it's testing this level again. So we're not expecting much movement, at least going into the new year, right? Especially with this holiday season. So it's likely that we will see consolidation on this area first, right? As well as structures being formed. So you can see here, right, there's very low volatility. Prices are pretty much moving sideways. So this is currently the region that we're seeing, right? So on the 4 hours, you can see that it's still holding on to this demand area, this resistance support level. The price tested this region as a resistance and it broke above, and currently it's holding above this region, right? So we could still see more upside within this zone. So what we're waiting for here, right? It's a clear form of its structure and price coming in to see a change in its structure. So for example, right, currently you can see that this is the last low that's being formed and prices are just pushing higher. So it could come into a supply area that's within this weekly zone, this area here, before we see a new high or a new low that's being formed. And once this new low is broken, this is when we can take it as a change in direction on the smaller time frame, and that might be in line with the weekly. So these are the two setups, right? We could potentially look at going into 2023. So of course, when we have our live trading session next week, we will be taking a look at the setup in more details, right? And hopefully when prices move then, right, we'll be seeing more new insights on this. Okay, so this is on euro dollar, right? The next one that I want to take a look at would be on gold. So at the same time, right, if you guys have any requests for any setups, right, do put them under the chat. So if you take a look at gold, you can see that on the higher time frame, right, at least on the monthly time frame, we don't really have any key levels that we're seeing here, right? If you're on the weekly time frame, this is the region. So this area here. So again, right, you can take a look at the candle. So in this case, this candle held within its wick before the break below. So this would be the supply region, this area here. So prices are currently sitting in this region. One thing to note is also that there is an ascending trend line, right? So price tested this region multiple times here, and we saw a break and a retest, right? So this could be a potential resistance area, but we're not taking any immediate entries over here, right? So this is just on the higher time frame. It's good for us to know that prices are potentially sitting on a resistance area, but for confirmation of a reversal, we need to see a change in structure on the smaller time frame. So this is the weekly picture, right? So one more thing that you can also check if you guys are using Fibonacci retracement, this is the last push and this pullback. So you can identify this high and this low, basically using this high as a starting point for your Fibonacci retracement and using the low as the ending point for the Fibonacci retracement here. So when you do that, you can see that starting from high to low, open up these key levels, right? We have the 50% Fibonacci retracement, which lines up exactly at this resistance area, right, or the supply zone that we've highlighted. So that's just something to keep in mind. So now that we're on the daily, you can see on the daily time frame, we're still seeing bullish market structure here, right, with higher lows and higher highs being formed. If you take a look at it in line chart, you can see subsequent higher lows and higher highs being formed as well. What this tells us is that this supply zone itself, right, prices are not reacting to this yet because we're still seeing bullish order flow, right, especially going into this supply region. So what we need to wait for, it's a change in structure, a break of the last low, before it signifies that this supply region is respected and we could be seeing more downside. So this is on the daily. If you go into the 4 hours time frame, you're seeing pretty much the same thing as well, right? So we're seeing equal highs that are being formed. There's a new low that's being formed over here, and currently prices are testing this region. So this is on the 4 hours, right? If you go into the 1 hour time frame, you can see that this is the area. So again, right, even on the 1 hour time frame, you can see successive higher lows and higher highs as well. Okay, so there isn't any key level right now, right? Or there's no key level, at least on the 4 hours time frame. Prices are coming into a supply region on the weekly. If you take a look at the 1 hour time frame, you can see this area itself, right? Prices are just forming consecutive higher lows and higher highs. One key thing or one interesting thing to note here is that you can see this candle, right? So within the 1 hour time frame, this candle itself held within its wick before we saw the the break and the retest of this region. So this candle on the 1 hour serves as a demand area. So this is the H1 demand area. So I'll just put this in a different color. Yeah, right. Let's say put it in gray with a deeper outline. Let me just lighten this. Okay, you can see that this is on the H1. So we have the demand area on the H1. If you go on to the 30 minutes time frame, you can see that within this candle itself, right, prices are still sitting on this H1 demand area. So you can see within the H1, there is also demand chain being formed and respected over here. So essentially price coming into the extreme of this area. So recall in our other sessions, right, the extreme of this area can be a demand zone. So price coming into the extreme of this area, you can see over here. And then once again, in this region. So you can see that's just coming in to test the support region, right, before it goes higher. So in terms of the resistance target, right, if we have a structure, so you can see that on the 1 hour, this is the structure. So price pushed up, it formed a new low, and we're seeing more upside in prices. So what this shows us is that if this low itself fails to break the high here, right? So if we're seeing a respect of the supply region and a failure of this demand zone, then what this tells us is that we could play a short-term target, targeting the low that we have here. Okay, so if price fails below this area, this demand region, then we could play a short targeting the low. So this would be what we term the downside confirmation. So that's one, right? And we can target this low. So you can take this low in as it is, right? Or if you can take it in line chart as well. So this is up to you. Okay, so you can take it like that. Right, so this is one, right? So if not, we could see price push much higher, given that there's no reaction to it as well, even though it's sitting on the higher time frame supply region. Okay, so this is the outlook on gold, right? So let me just bring back the slides. So for today, we covered on the global market outlook, right? So essentially the key themes for 2022 would be higher interest rates as well as inflation. So because of inflation, it has been forcing banks, central banks to aggressively tighten their monetary policy in order to tame inflation. But we are also seeing mild recession risks, right? Especially in the EU and UK region, where it's heavily reliant on energy imports, and also China easing its COVID restrictions. So we should be seeing its economy open up and hopefully better a pickup in activity next year. So in terms of how the dollar performed as compared to the rest of its major currencies, we can see that dollar has been outperforming its peers, right, according to the chart that we saw earlier. And the worst performer would be yen, right? So this also explains why dollar yen has been pushing higher. Interest rates differentials would be part of it, right? So essentially when there's a higher wider interest rate gap, right, then investors have more incentive to hold the dollar as compared to the lower yielding currencies. So apart from that, there is also geopolitical turmoil, right, as well as this macro headwinds that we're seeing. And dollar itself is also seen as a safe haven asset, right? So when there is such risk in the market, right, along with higher interest rate prospects for dollar, right, when Fed is seen to be aggressively tightening their monetary policy essentially to fight inflation, then this is when it can drive demand for the dollar. So which is why we saw how the dollar outperformed this year. In terms of the trade opportunities to look out for, right, we covered on dollar index, euro dollar, as well as gold. So those are the three setups that we look at. We can see that they are currently sitting on the higher time frames key zone. So ideally what we want to see going into next year, right, it's clear structure to be formed, right? And if there is a change in structure on the smaller time frame, then this could be a sign that we're seeing a reversal. So it's the market outlook for today, right? So if you guys have any questions, feel free to put them under the questions chat. And if you guys do want to take a look at the other recordings, right, go to vantagemarkets.com/webinars, right? We do have the previous recordings posted on YouTube as well. And if you have any other questions, especially regarding your accounts, please do reach out to support@vantagemarkets.com. Okay, so with that, right, I see that we have no questions. Okay, so with that, we have come to the end of the session, right? Thanks everyone for staying with us till the end of the session, and have a happy new year, right? Enjoy the holidays. We'll be back again next week. So we'll catch you guys next week for our live trading session. So thank you and goodbye.